Dude, you're a legend on YouTube. You've got 330,000 subscribers. Thanks for coming to do this.
Anthony, thanks for having me, man. It's a pleasure to be here.
Yeah. All right, so let's talk about a couple of things. Let's start with what's your background? Like, how do you get into crypto and financial markets?
Yeah, so it's a little bit of a long story. I guess I should probably talk about the first time I ran into Bitcoin. So back in 2011, this is when I really went down the rabbit hole of learning about financial markets, economics, politics, and I kind of fell down the rabbit hole of learning about central banks and understanding, the mismanagement of the Fed during 2008, central bank monetary policy, quantitative easing. And I actually kind of went in this like very small phase where I wouldn't say I was really depressed, but I was just kind of upset because I felt like there was no solution to fixing kind of the problems of monetary policy. So I inevitably, while watching a ton of documentaries and videos and just kind of being self-taught in the world of finance, I found a video called What is Bitcoin? And that's the famed kind of animated video that came out in the early days. And from that video, I watched and tried to understand the concept, but to me, it sounded like it was a ploy to like play on a bunch of libertarians like myself at the time who wanted something better. And the issue was I was trading at the time, so instead of going to read the Bitcoin white paper, I inevitably ended up looking at the Bitstamp price feed for Bitcoin when it was $3 in November 2011. And the famed kind of like self-quote I have for myself is I was like, who in their right mind would pay $3 for some digital token? Like, this is a total scam. I wrote it off. And after that, it was probably one of my bigger regrets. But at the same time, I actually don't really regret it too much because over the next few years, I kept studying and better understanding financial markets, understanding central bank monetary policy. And I think it was back in 2016, when Bitcoin had revisited back to its all-time highs from back during the days of the Silk Road at 1100, I was like, okay, I need to really research this and understand it. So I read the white paper. I got the base concept of it, and I finally was like, after about 2 or 3 kind of full through reads, it finally hit me that this was the tool, or at least the first step in a tool of new assets that were going to help challenge traditional monetary policy. So fast forward a little bit into 2017, I was going into university at the time. I was studying into a double major of business with a concentration in finance. And I actually inevitably dropped out of university after the first year. I maintained a good GPA. I was going to go continue through for standard 4 years. But I actually joined a program called Praxis. It's one of the many new kind of private programs that are helping people to streamline the whole process of going to 4 years of university. And it led me to working out of a startup in Silicon Valley. It was a great company, great team, very fast-paced. And at the same time, I also had created the YouTube channel as well. So the program I was in basically encouraged people to create a project every month. And at the time, I was pursuing a career in data analytics. So that's hence the name DataDash in that case. So I inevitably decided to do a YouTube channel called DataDash, where I would track my progress of learning SQL and data management, and then also into data science, as I was going to pursue that in the coming months. And inevitably, I wanted to get to this point where I was like, I'd created a tutorial on SQL and how to do data analytics, but I was like, I want to showcase to employers that are going to be seeing this that I really like this stuff. This is my passion, this is my blood. So I actually did 2 videos covering the thing that I was researching back and back again, which was cryptocurrency markets. So I did this, I think about 2 15 or 20-minute videos just summarizing the news in July of 2017. And I think it was the first or second video that got like 100 views, and I had no subscribers. And I was like, this is going to be huge. Like, I need to keep doing this. So to my shock, I'd tried to teach people about financial markets when I was younger. And lo and behold, whereas people didn't really care in the past, it seemed a lot of people really cared this time around. And I had something to say from all the research I was doing, and we just kept producing videos, and we inevitably grew the largest channel by subscribers in the crypto space. So it's been a wild journey these last 2.5 years.
What's like the biggest thing you've taken away from building that big of an audience on a platform that's pretty crowded at this point, right?
Mm-hmm.
Like what's the thing that you've learned the most, you think?
Yeah, I think the biggest thing that really shocked me is it's the small things that people really enjoy that I think get them coming to the channel back time and time again. From the beginning days, as we were talking a little bit beforehand, when I basically started the channel, I was doing it out of my house and stuff. It was very simple. And even in the background, you could see my bed. I was just recording off a simple webcam on my computer. And it was funny at the time, like I'd get 1 or 2 comments that would say like, hey, Nick, you really need to get a green screen. You need to go professional, get a studio. And anytime someone would leave a comment like that, and then maybe I'd talk about it in my video, people would go ballistic. They say, Nick, don't do that. Like, we love how you keep it genuine. We love how you're not trying to sell yourself. And it was one of the things that really stuck to me is that I think when it comes to financial markets, the issue that so many people have is that they always feel like they're being sold on something. They always feel like there's a guy in the middle trying to make a cut off them. And in this case, we were able to just kind of build a channel that was genuine in nature. It was just simply about, hey, this is what I'm analyzing from markets. In many ways, I could be just as lost as you are in this case and trying to discover all this. But it at least was just showcased as that and that alone. So I had a great time. And over the years, what crypto has really taught me from the conferences I've attended, the people I've spoken to, and just understanding this industry specifically as well as other industries and macroeconomics, you tend to learn that taking a more broader and more open-minded view is always going to lead you towards the right answer. So those would be probably the two big takeaways I've gotten from it.
Yeah, and I guess part of this is like the quality of the content matters, right? Meaning like the actual information, but the authenticity of how you present it is really important. Anything else that you've learned kind of in like the operational component we were talking before about just the consistency and some of that stuff? Maybe talk a little bit about how that helped you grow.
Absolutely, man. Yeah, so in the sense of how I was actually going about creating the channel, I looked back and tried to understand kind of like the three reasons why we grew the way we did. From July of 2017, we were actually one of the later YouTube channels, and by December of 2017, I think we had grown to the largest one alongside some of the other big content creators. The first thing that was clear was that the timing was imperative, and that's pretty much with YouTube channels, but also any startup in any industry, right? So it was very much a luck factor in that case. But the other two things that I did that I think a lot of other YouTubers just weren't meeting to the degree of at the time was watch time and residual content. So YouTube back then, it's always changing its algorithm, but back in 2017 factored really two things. They wanted consistent content being produced. So if you could put out 2 videos a day like I was, then in that case you were putting out a good amount of content. And in those videos, YouTube wants to see a good watch time. They want to have enough watch time to where you're keeping someone out on video for multiple minutes that leaves more room for ad space and also just keeps people on the platform. And at the time we were getting, I think it was like a 50 or 60% retention rate on videos that were going to 15 to 20 minutes, sometimes 30 minutes on a lot of the educational pieces. We did a lot of educational content. I did daily updates, which is our kind of the major thing we do on the channel, where we just kind of analyze markets. And through those simple pieces, we were able to retain people. And a lot of people were learning a lot of great things. These were a lot of newcomers into the space. So I saw a very imperative kind of responsibility to try to be as genuine as I could, offer as much as I could for free, and also just kind of showcase the basic comprehensive factors of markets.
Yeah. And I guess as you've done this, you kind of learn what works and what doesn't work, right? You create a piece of content every day, and you quickly realize like, oh, people really like when I talk about X versus Y. And it's kind of like how you went from, oh, I'm going to do this around data analytics to, oh, this crypto and financial market thing is way more popular. It's almost like the audience pulls you into the type of content they want to hear.
Exactly, yeah. So for example, like I do like to try and experiment and try new things. I think it was back in early 2018 when I started to realize very clearly at the peak of 2017, I was like, crypto markets are going to cool off here. We're getting towards the end of the cycle. I had basically traded most of my altcoin positions like 3 or 4 days from the peak.
Really?
So, yeah. I was basically, I'd seen bubbles before. I was like, this is going to cool off. So the main priority for me was thinking about, how can I get other content on the channel that people want to see? And I slowly but surely kind of weaved in new content about traditional markets, kind of coming from more of a macro perspective like you and I care about and stuff, focusing on equities, what's going on in the bond markets, things that most crypto, traders probably wouldn't care about. And slowly over time, I saw people did value these things. But I still think to this day, the reason the bulk of our content is crypto is because I'm not only passionate about it, but as you said, most people want to see that. And it's the most exciting markets where I'm most positioned out of any market right now. I mean, there's just so much development going on. So it's easy to be able to talk about crypto because there's always new developments.
Yeah. And then what about YouTube as a platform? Obviously, there's these huge advantages. They've got a very, very large user base. The content creation tools are pretty simple to use. But then there's problems around deplatforming, especially with some crypto videos, etc. Maybe just talk about like the pros and cons of building an audience on YouTube versus some of the other channels maybe that people have built audiences on.
Absolutely, man. Yeah, to put it simple, I've used YouTube since back in 2007. I was a really early adopter of the platform, and that concept of just being able to upload anything you want, it still is not really plausible on a lot of different platforms because there's so many minute issues that get in the way. YouTube has just been straight, clean. They've always basically delivered on that promise. But there has been an issue, I would say, over the last few years that crypto content, due to YouTube's new flagging systems and people abusing that system, has kind of corrupted a lot of channels. It's basically flagged content that was never violating the rules. But from what I've seen, YouTube has not directly tried to censor YouTube channels. Again, trying to be not biased, I don't agree with YouTube's kind of active role in trying to parade different content creators and censor others. But at the same time, it doesn't seem like they're taking a negative stance on crypto. And then outside of that, you've got a good platform on maybe Facebook and Twitter and, some shorter platforms like Instagram and Snapchat. But if you're talking about long format content, the next best video sole platform is like Vimeo and a few others and then also a lot of the censorship resistant platforms, I like them. I in fact uploaded on one called 3Speak, which was based on Steam, the Steam blockchain. And it was really cool. It works great and they're getting so much better. But I think the issue that you run into is that you get a kind of isolated audience in this case who have been censored out, whether you're talking about crypto or certain political fields. And because of that, you're not bringing over the mass audience. So my belief is that if we really do want to fight against this censorship, similar to how Twitter revolutionized social media by bringing it down to 140 characters per tweet, we have to have some kind of unique selling point, something that will bring people in on a convenience factor, something that just basically sells it. And then you can have that standard of we're not going to censor things, or maybe even build it on a public blockchain of some sort.
Yeah. Have you looked at any of the other platforms, like the blockchain-based content platforms?
I have, yeah. So like I was saying, I experimented with 3Speak, DTube as well. There's a few ones coming up that look a lot more promising than 2 or 3 years ago. The upload times are much better. They're using a lot of interesting technologies like IPFS, and the user experience is getting better. But again, I haven't seen that kind of wow factor that makes me go, you know what? I know that I have to upload on this platform versus YouTube, and that's a very difficult thing to do. I don't mean to, denigrate the work that these people have done and stuff. I think they're pushing the nail in this case of trying to get a better platform out there, and it's giving us a safe haven, especially with all the issues that have been going on with cryptocurrency YouTube channels. But like I said, I think YouTube is still reigning king, and basically, I'll give you an example. Like on our channel, we haven't been able to use the term, the virus that's been going around recently. So you have to kind of self-censor on those very small words. And
why won't they let you use it?
So you get demonetized. So you can technically use it, but you won't be able to run ads on your videos. And the ironic thing is,
if you're talking about COVID,
yeah,
okay,
yeah. So that's the thing.
You made me scared to say.
Yeah, that's why I was trying not to say it too much on it, because I know you're a content producer as well. So it's issues like that that just kind of make it a little bit burdensome.
Why are they doing that?
So the reason why is YouTube has this is one of the worst parts about YouTube and the censorship that we've seen. Over the last 2 to 3 years, YouTube has prioritized not only higher tier channels, so for example like CNBC, a lot of the big channels for news, or CNN and all these different areas. And then also they'll basically give them not only a higher ad rate in this case for being these kind of certified channels, but along with that as well, they basically kiss the rear end of advertisers. They basically want to make sure that, for example, if you're running a company and you have an advertisement, that it's not going to be on something that's controversial or something that causes fear. It's the same reason why you wouldn't want it on something talking about drugs or criminal activity, right? So it's again, they kind of pile in all these things. Even though COVID it's just something that's going around right now, and it's an important news topic, some advertisers don't want that, so they put you on limited ads, which basically means you're not getting any ad revenue.
Got it. Very, very interesting. And so let's talk a little bit about kind of the macro environment, because I know that you spent a lot of time thinking there. What's your assessment of what's going on right now? It's just this chaotic environment where I think a lot of people are saying, well, something's happening. I don't quite understand it, and I don't know what's going to happen in the future, but just the fact that I know something's happening and there's this uncertainty makes me uneasy. But how do you kind of evaluate some of the things we're seeing?
Yeah, so, I don't know where to really tackle this first. I would say on the surface level, everyone's obviously concerned about COVID, and basically people are wondering whether or not this virus is going to keep on spreading. I think that it is going to be, as the World Health Organization defined today, it's going to be a pandemic. It's been very clear from the start that it's a very viral virus in this case, but what's nice is that if we don't keep it in the range of elderly people or people who are at an older age bracket, then in this case it won't be so much deadly, it'll be a stunt to the economy. So I have this very middle ground belief that even though we are going to see a decent amount of deaths, which is very sad, I don't think this is going to be, for example, like the bird flu or anything like that. I think this is going to be more than anything a stunt to the global economy. Because you've already seen it in the travel industry. You're already seeing it in a weak oil industry right now. Now people are not flying. You also have as well an oil war going on. So a lot of key macro factors coming in and setting us into a very weak environment that's susceptible to a recession. And as you've seen probably, Anthony, I don't know if you've been looking, but like at the futures and stuff, for the major indices, for the S&P 500 and the Dow Jones, yesterday, we had tons of governments come out with stimulus packages saying that they were going to, again, provide bailouts or provide stimulus to people who had to pay down mortgages or for small businesses. And also, we've had the major central banks like the Bank of England right now that just dropped down to, I think it was 25 or 50 basis points, a huge drop alongside the Fed. And the markets aren't reacting to this. It's not enough. And the reason why is because you can throw as much beneficial things as possible at it, but at the end of the day, we're at a point where over the next 2 or 3 weeks at a minimum, probably over the next 2 or 3 months, we're going to see a huge stunt in travel and conventions, and along with that as well, you also have the troubles in the oil market, and also just a lot of bubbling issues, I think, as you might have talked about with Raoul Paul, under the current financial sector. We saw that in repo markets back a couple of months ago, and we're really seeing it in the sense of treasury markets. I mean, that's the really big question mark, I think, that's going to
explain that more. How do you analyze what's happening there?
Yeah, so basically, I think we're in the later stages of global monetary policy, or basically the monetary policy of globalism. So we've basically seen over the last 30, 40 years that bonds have been in a bull market. Bonds have continued to grow in value. They've been a steady asset for a lot of people's portfolios. And when it comes to U.S. Treasuries specifically, they're kind of seen as the principal safe investment used in a lot of formulas like the Sharpe ratio, which usually will adjust the Treasury, use it as a model to see what's the guaranteed return you could always get on your money. So Treasuries are seen as the safe haven asset, and it's a multi-trillion-dollar market, which means it's very important. Now, what we're seeing is much like other bonds for governments across the world in Europe, in countries like Germany or Denmark, and also in countries in Asia like Japan, we're now entering into a phenomena where bond yields have been not only declining over the last few decades, but now they're going below zero. They're going into negative territory. And on a logical basis, this shouldn't be able to happen, right? Basically what it's saying is, whereas in the traditional world back 10 years ago, you would hold a treasury and you get some form of yield on it, you're now actually having to pay for holding that treasury. You're being penalized for having that in your portfolio. And some people would ask, why are people buying it? Why are they paying a higher price for it? And it's for 2 reasons. One, there are traders who are speculating. It tends to be that bond prices go up while the yields decline. So that's where you're getting the negative drop, and then you're also getting the prices going sky high. So there's a reason for them to buy in the short term. And then also a lot of portfolio managers have to put some allocation of people's pension funds or retirement account into government treasuries of some sort. So that's the interesting dilemma where you have this mandate to buy it, similar to the housing crisis in a sense where banks were forced to lend out to participants. So I think what we're doing is we're building kind of the final peak to the bond bubble. And eventually, once that pops, whether that restriction gets removed or the negative burden of the negative yields on your portfolio starts mitigating all the returns of your equities, of your other assets like gold and silver, that's the moment it all ends. And it's going to be a huge breakdown. It's going to be worse in this case if this actually happens the way that we're talking about. It's going to be worse than 2008 with the mortgage crisis.
Do you think central banks or other organizations, the banks, whoever, can step in and maybe prevent it from happening? Or do you think it's just a foregone conclusion at this point? Like, it's not a question of whether it's going to happen, it's a question of when.
Yeah. Well, the first thing to understand is that there's a very near and direct correlation between the Fed funds rate, which is the interest rate the Federal Reserve is setting, alongside other central banks they have, for example, like the LIBOR rate in the UK. But these key rates are dropping down near to zero, and treasuries in many ways can almost be like a forward kind of prediction of where the markets think the Fed is taking monetary policy. So in this case, as you saw over the last 2 weeks, we saw one of the sharpest drops across most treasuries in the United States in their yields that we've ever seen. And we're testing back towards the range where we were back when the Fed funds rate was down to zero. So this signals confidence, and you can look at like the CME group prediction markets. They're betting the Fed is going to be lowering in the next 1 or 2 months down back to 0 or 25 basis points, basically free money in this case. And then after that, it's a question of whether or not the Fed goes negative. If the Fed starts having a negative rate, you're going to see exactly what you saw in Europe as well as Japan, and that's when the negative treasuries come in. So the question here is whether or not central banks can still fight the downside from the coronavirus, the issue in energy markets, which are going to be a multitude of billion-dollar bankruptcies, If they can somehow offset that through fiscal policy and the federal government, or use other monetary tools that don't involve interest rates, like printing money through quantitative easing, then in that case they might be able to stop it. But I think eventually you get to this game here where a lot of people who understand kind of the problems of central banks, there's always going to be more debt in the economy than there is actual existing dollars and credit. So in this case, we're going to enter this dilemma, I think, eventually. And if it enters in at the wrong time, where central banks react too quickly, and we enter into that negative territory, that's when we get into a very experimental range.
Yeah, and one of the things that's the big question, I guess, right, is just, they still have the tools, right, so they can cut rates, they can print money, but are those tools as effective as they were in the past, right? Obviously, they cut rates 500 basis points or more in the last 2 recessions. We don't really have that to do now unless you want to go super, super negative. They can definitely print money, although they're claiming it's not QE. They've expanded their balance sheet, $400 billion or so in assets. And so does that lead us to their cut rates, they print money, neither one has the impact that they want it to have, and therefore what you have to do then is take really drastic measures and leapfrog into kind of the modern monetary theory, helicopter money world. I don't know. What do you think about that?
Yeah, I would say that it's not only I would not only say I'm confident that it's not going to have a proper effect this time around. I don't think it's really had a proper effect over the last 12 years. We've been in the longest economic expansion in the sense of asset markets. So for properties, for equities, if you've been exposed in assets like that, you've been doing great. But if you talk about the real underlying economy, people are hurting. It's been like that ever since back then, because for the last few decades, I think since we really got off, and I'm not trying to be a total Austrian economist in this case, but since we got off the gold standard, you can actually see a decline in the middle class directly correlated, as well as a growth in people in the wealthier brackets, as well as in poorer or lower middle class brackets. And this is basically because the average everyday person in this case doesn't own assets, plain and simple. Now, if we lived in a world where everyone was educated in finance and we all owned a basket of assets and we saved and we weren't all just looking for a big basket of consumers with a few people investing, then in that case, I would say maybe it might have worked. It would have been interesting to see how that would have reacted, because consumers would have more in their retirement. They wouldn't be crunched under a bunch of debt. But we've built this dilemma now where eventually, we can see we've built a systematic issue where people are not in those asset classes. Just for perspective, the bottom half of America, for example, owns less than 0.5% of all assets. That's all properties, equities, and also government treasuries or bonds. So, when bonds go up and stocks go up and properties go up, it's benefiting a very select few, in this case, who have the exposure and the knowledge to these markets.
Well, it's actually making it worse, because not only is it helping the rich, it in effect is hurting the poor as well, right? There's a wider separation of the income inequality, which is pretty telling. Does financial education fix that? Is it an education problem where if we actually taught people about money and taught them about investing, that could solve the problem?
Yeah, I think, it's two things. One, very much, I think education is going to be huge. Like when we talk about regulation in the crypto space, one of the biggest issues that I find, and I actually talked to Hester Pierce about this, was that she's actually someone who believes there should be no regulation in crypto markets. But I actually was talking to her about some issues in the exchange space and stuff. I'd seen a lot of the fake volume. And I think that's a great example where you could teach people how to spot things like that and teach people the basics of financial literacy. Because when I went to high school, for example, in the public education system in the U.S., I was going to one of the better schools in the state. And finance was an elective. It was something you could choose to do. And all they taught you about was CDs, savings accounts, mortgages, and
it's better than most schools.
Yeah, right, and that's the best that you can get. So I think that that kind of boost to education would be huge, making that a part of the core curriculum if we're going to be living in this world where we incentivize people to hold assets. And the second thing as well, when we're talking about this as well, is you were talking about education. I think the second point as well that's important to keep in mind is that we're going to have some not only innovation in the sector for finance, but also some structural legislative changes. So one thing that I've always talked about that a lot of people have started to mention is stock buybacks. One of the biggest issues that's kept stocks going up over the last decade is the $5 trillion of buy-side pressure that's come from corporations in the U.S. Due to taking basically the strong economic earnings that these companies have had over the last decade due to free money, low interest rates, and basically propping up the stock. And that's beneficial for them as shareholders, but it doesn't really reinvest into the company. It doesn't reinvest into real economic growth, because the S&P 500 can be rallying, tenfold, but at the same time, the underlying economy could do 1 or 2, at 2x in that case in growth.
I don't think a lot of people understand the game that corporate executives have played over the last 12 years. But for those that don't know, it goes something like this. I'm the CEO of a company. I convince my board, who also is compensated in heavily equity of my company, right? We get shares as part of our compensation package, to issue debt. That debt gives us cash, right? We borrow money. We take that money. We then use it to buy back stocks of our own business, which then pushes up the share price because the market capitalization of the company doesn't change. There's just less shares, so each share has to be worth more money. And as we do that, we push the share price up. That share price going up actually means that we, in effect, are getting paid more money on an annual basis. So we're enriching ourselves by putting more debt onto the company. But what do I do after I do that once or twice or 3 times? I go do it all the time because now I'm putting debt onto a company of which I'm not responsible for it. The company is taking on that debt. I then can take it, push up the share price. My personal compensation goes through the roof. I get rich. And right when we get near the top, what we see is all of these executives are leaving, right? And all is really not an exaggeration. I mean, we're at the highest levels of CEOs leaving their companies that we've seen in years.
Absolutely.
And it's just this playbook of, if you don't know the game, you can't win the game, right? If you don't know the rules of the game, you can't win the game. These executives know the rules of the game, and they've executed it near perfectly over the last 10 to 12 years, and they have gotten really, really, really rich doing it.
Absolutely. And Anthony, to that point, the sad thing is, too, as you see now, just really back a few weeks ago when we were at the peak of all the major top 3 indices, and Apple was going up $400 billion in the matter of 3 or 4 months without any real changes to corporate earnings. You saw the peak amount of retail volume on exchange platforms, meaning that there is retail traders, just to put it simple, being everyday people trading at record levels that we haven't seen in years. So you get a lot of people buying at the top and stuff when all these insiders, they're selling, they're leaving the companies. And as you're mentioning, just in that mechanic, it's so simple, but when you're basically reducing and buying back the shares off the market, you inevitably reduce the earnings, so you increase the earnings per share. And this, again, gives you more cash flow in this case, where you can basically go back and buy more and more stock. So it's this inevitable kind of almost like Ponzi mechanism that just keeps the price going, no matter if actual investors are buying or selling it. And then what happens, it tends to be that people usually end up feeling they have to FOMO into equities because, A, there's inflation you have to worry about, but also it's like, look, if Apple's buying back $100 billion of its own share, that's $100 billion of buy-side pressure. Why am I betting against that? And Apple's a good cash-rich company. Let me buy more stock in it. So it builds this inevitable bubble in equities. And I think you put it perfectly, Anthony. It's basically a very misaligned incentive system because that debt that they're taking on is never going to be the responsibility of that individual shareholder. It's going to be a problem for the people who stay at the company when things go bust. And it's going to mean massive layoffs. It already has meant layoffs because companies have allocated either the debt that they would take out or the earnings per share that they would reinvest. They've already put that towards stock buybacks. Like some of the major auto producers in the U.S., I think GM, Chrysler, Ford. You can take a look over the last decade, articles on any of the major financial publication websites, massive layoffs, jobs being shipped overseas or automated, and then also enriching shareholders through massive stock buyback programs. And it's, again, I'm a free market guy. I'm very still libertarian to where I was back in the day. I love free markets, but this to me is not free markets because what you're doing is you're putting money into an artificial, almost as we talked about, almost an artificial Ponzi in a sense that enriches the shareholder. And it doesn't compensate the employee because they don't own shares in the company most likely, or B, they're not getting that money reinvested back into higher wages or basically real economic development and research of the company.
Yeah, it's really scary, right? Because there's a fine line between fear-mongering, conspiracy theory, what ifs of the world, and reality and what's likely to happen. And the part, as I think through this more and more, is we understand structurally how the game works. Mm-hmm. And I think we all know that from a theoretical standpoint, how the game ends. The question is, how close can we get to that end and it not happen, right? It's kind of like touching fire, right? Of like, hey, if I'm 2 feet away from the fire, do I get burnt? No. Well, what if I'm 1.5 feet? What if I'm a foot? Could I be 6 inches away and not get burnt, right? Could I actually touch the fire and not get burnt? Oh, okay, if I really stick my hand in, then I get burnt, right? Well, The problem with that is that you have to get closer and closer and closer, and the only way you know how do I get burnt is to actually get burnt, right? And that kind of feels like what the financial system is doing, is we keep kicking the can down the road and we're like, well, how much debt could we actually have in the system? How much could we have the buybacks all of a sudden disappear and not crash? At what point would the government not step in and bail out industries, right? All this kind of stuff. And the short answer is, look, the financial system has never failed.
Yeah.
So I think that line is really important and interesting to kind of keep in mind, because the short answer is we don't know, but they've all ended before, right? And so it's I don't know. How do you think about it?
I think, honestly, to your question, Anthony, I think we're going to figure out very soon. And that's why I say, for example, like the big question mark, when we get into negative yielding bonds in the United States, when the Treasury, the security of the world, that is like the leading investment of portfolios across the world. People in other countries, portfolio managers, basically work as hard as they can to get Treasury allocations. When that asset starts yielding a negative return, I'm not going to say that it can't exist. It's been existing in Europe and Japan for a while. So long as people are mandated to own it in their portfolio, it can last for a little while, even on a logical basis. But, man, I don't know what that's going to lead to. I think that's when the U.S. goes negative, everyone can go negative. It kind of sets a precedent in that case where once you go below zero, I mean, when the U.S. does it, why can't other countries do it?
Follow the leader.
Yeah, exactly. Yeah, as you said, the U.S. hasn't failed yet in the sense of its economic system. I mean, we've had failures in it, but again, it's always been able to sustain itself, and we've been able to kick the can down the road. But I think this is where, again, I don't want to always just preach crypto and digital assets, but I think this is where Bitcoin, especially with the halving event coming up, if you view it from a macro perspective, I think people are going to look for a market where they can get a very nice return, like a lot of growth potential, especially macro traders. But along with that, somewhere where you can get a hedge, where you're not getting a negative yield, but also you're in a fixed monetary policy, which is, of course, Bitcoin's 21 million coins. So I think as that becomes more mainstream, as we get above 20,000, we have the halving event, we're above the previous highs. That's when I think you start to get a lot of retail interest again, back like what we saw back in 16 to 20K for Bitcoin in 2017. And then also you're going to start seeing a lot of institutional representation as well. When this becomes less than a $150 billion asset class and becomes a $1 trillion asset class, that's when you get people talking about it.
Yeah. What else are you worried about in the financial system? So outside of kind of what I'll call the structural issues, are there other aspects that you're paying attention to right now that you think people should be aware of?
Yeah, I think there's a lot of big issues and stuff. So right now, like I'm working on a startup we haven't really come forward to talk about too much on the channel. But there's a lot of issues that would point towards your question earlier. You were saying would education alone be good enough? And I actually would say no, because the issue right now is that there's still so many inefficiencies in the world of finance. And one of them right now is that right now in your savings account in the United States, the average savings rate is 0.09%. People, and here's the even scarier part, since the recession, you might think that savings deposits have gone down. They've actually more than doubled. They're right now sitting around, the latest figure for 2019, I think is $9.2 trillion. So that's all your mom and pop, everyday people who don't have their money in either a pension fund or invested into equities or property. It's sitting there in a savings account and it's yielding nothing, and it's getting depreciated by inflation. So they're barely getting by. I think that we need to see a much broader range of services and basically financial assets and entries to the world of finance for a lot of everyday people. And I think we're getting there. It's just innovation. It takes time, and it takes a lot of regulatory hammering and stuff from a lot of new startups and companies that are pushing the boundaries. And what's cool is I think crypto is really leading the way. We're seeing that in DeFi. We're seeing a lot of opportunities where you can earn a much higher rate of interest than your traditional savings account. And what's nice is that it's completely collateralized. It's basically taking these markets that would have been the markets your bank would go to with your deposits and make all the money, and basically opening it up to you. To put it simple, just to see how big of a problem this is, right now, as we mentioned, the average yield is 0.09% in a savings account. A bank, on average in the United States, through mortgages, through student loans, through short-term credit, is making 15% off of saving deposits. So there's that spread there. There's that 15% that the bank's making, and they're giving you 0.09% of it, so practically nothing. And they're walking away with it. No one challenges it. So I think that's one of the big inefficiencies that's going to get challenged. I think the friction in payment processors like Visa and MasterCard, a lot of that's going to get challenged in the next few years. But we'll have to see. I think it's going to be a really exciting next 2 or 3 years, and crypto is definitely going to play a big role in all of that.
How much of that is technology solutions versus you think just business model innovation?
I think the technology is already here for it. It's a matter of making the user experience easier, if anything. And then on the other side, it's the legal side, just making sure you're doing it in a compliant way and keeping it where it's not difficult for users to use. I think, Bitcoin has proven to us that, frictionless payments are huge, low fees, quick confirmation times. But the issue still remains not only in the sense of technical things like scalability, but also just on a user experience frontier. And what I think we're going to learn is that we're going to need to have a big focus on stable coins in the space when it comes to cryptocurrency wallets. An average person does not want to use Bitcoin either for payments, but also does not want to see Bitcoin when they first hear about crypto. It's overwhelming. As we talked about, many people don't understand it still. So I think if we can do something that transitions people out of the banking world into something where they can start to get familiar with crypto, that's going to be the golden ticket to not only expand crypto to hundreds of millions of users, if not billions in the long term, but along with that as well, getting people into a system where they're getting better opportunities where they're actually their own bank in a sense.
Yeah, it's really interesting when you layer, can we technically make this work? Is it presented in a user-friendly manner? Do the users have the education necessary to do this? And then actually there's a fourth one. Do the users have the discipline to stick with this, right? And I think one of the things we've talked about in the past is the first three most people talk about. The discipline of executing the strategies in times of chaos or uncertainty pretty much goes out the window. Yep. There's people who are freaking out right now. They think the world's ending. There's people who think that they're going to be Warren Buffett and, buy the bottom of some market. It's just craziness. And what you basically look at and you just say, every single person who thinks on the extreme of either one of those ends is the person who's undisciplined and who's probably actually not going to do pretty well in these times of uncertainty.
Yeah. I would say above all, it's funny because a lot of those people are very amplified, especially in markets like crypto that are very highly volatile. I would say most people at the end of the day, the biggest issue for them is that it seems so overwhelming. And to have a system, I think, where during those times, not only from previous better education, which is again what we talked about earlier, but also better systems on the front end. My bank doesn't give me any advice or doesn't point me to any direction of education when the S&P 500 drops 20% like it did over these last 4 weeks. And that's a problem, right? To not have something that could at least advise you on very basics or point you into a direction where you can learn about things in a very short manner of time, like you can do pretty much everything else now on the internet nowadays. I think that's an issue that we need to have on a lot of these systems. And also having systems as well that help keep you disciplined. There's a lot of financial planning apps now that will help put money away for you. It'll be like a smart AI that you're talking to, and it'll say like Nick, you really need to put away $15 every week. You're spending too much, and it'll basically automate it where it just simply puts it away in my savings or puts it into something like Acorns where it's slowly investing over time. So you see the apps like that doing it in very simple ways, but it's very, very practical and powerful because people don't have to think about it, and also as well it gets things in an automated fashion where they're doing something much more disciplined for the long term.
Yeah, my buddy Brian Norgard calls it no mind, right?
No
Basically
mind,
this idea of you do it, right?
Yeah.
The user doesn't have to think about doing things because that thinking process causes friction and usually changes behavior.
Absolutely. Yeah, I think about it in a lot of the applications we do nowadays. I don't think that expectation of things being instantaneous and simple is a bad thing. We're in a fast-paced moving world and stuff. People are living by the hour, working 9 to 5. So I think that if you can make something simple, it's one of the best things you can do. I think helping people as well who want to get that better understanding and learn about it, that's great. But it would be like telling people they have, the thing I always say, for example, a lot of people in the crypto space have a big issue of trying to bring people in to the Bitcoin movement and say, here's the 10 reasons why Bitcoin is great and stuff. It challenges central bank monetary policy, so you have to understand that. You have to understand how the Bitcoin protocol works. Here are Bitcoin addresses, SHA-256, and people are like, oh my gosh, this is crazy.
You guys are nerds.
Yeah, exactly, right? They're going to
nerds in a positive way, but nerds.
Yeah, exactly. Right? Yeah, they're going to be like, wow, this guy's way too smart, and I don't understand half of what he's talking about. And that's an issue is you lose someone. So the best thing to do is to show them the clear utilities of what crypto can bring. And then you can slowly edge them on to say, hey, take a look into Bitcoin and stuff. And basically, Bitcoin is digital gold. It's all these very surface level concepts. It would be my main point I always drill in is it would be like, for example, if we still live in a world in the next 10 years where I have to send Bitcoin through someone's long hashed out address, it would be like me, for example, using voice over internet protocol or one of the major internet protocols and having to type out some long strung out address when I want to send an email to Anthony or someone. It's completely backwards, and this is the user experience 10 to 12 years after Bitcoin has had public wallets and tools to actually utilize it. And we're just not there. So we're getting a lot better. The space is drastically improving with DeFi, and a lot of the wallets are getting better. But when you do that and you find the killer app for crypto, I think we're going to get our next, few million users.
Well, so here's actually my view is that people don't remember the internet didn't start in the 1990s.
Right.
It started way before that, and it took decades before we started to get the user experiences that now we've all come to know and love. But even the AOLs with the slow dial-up speed and kind of the weird noise.
That was late to the party, yeah.
Yeah, that was mid-90s, right? And that was, I think, the internet, mid-60s, so 30 years later. Mm-hmm. Takes a long time to build, right?
It does.
It's really hard to do this stuff. But even if you look back to 2010, 2011, 2012, when people kind of really started to come into the Bitcoin space, if you were early, and compare it to today, night and day difference. Imagine 5 years from now, 10 years from now, again, I think it'll be night and day difference. Will that be every person is ready to use Bitcoin, as the global reserve currency? I don't think we know, right? But I do think that the sound money of Bitcoin at some point becomes the dominant form. It's just, what does that timeline look like? Who knows? And so you've got to have a really, really low time preference to, be open-minded about this.
Yeah, to build on that point, Anthony, the thing, again, I think a lot of people have an issue with this perspective because they get caught up in the short-term volatility of Bitcoin and the crypto space. But if you go back to your point there about where we are, we're at less than 1% global adoption. That's basically, that's not even using crypto in daily life. That's people owning Bitcoin or some form of digital asset. And, the equivalent of that is where the internet was in 1994. Mm-hmm. So less than 1% of the world was using the internet in 1994. So again, even before the AOLs and the Yahoos and all the big tech companies that came up eventually, we haven't even hit that phase yet. So what people saw in 2017 was a blip on the map. It's going to be much bigger this next time around. And that's when Bitcoin has its first real .com bubble, where basically people start to see it as a $1 trillion asset. And you think about it, to your point, Anthony, how is it going to be where people actually start using this in a more kind of comprehensible way rather than just buying Bitcoin and holding it? I have a very big belief that Bitcoin and other cryptocurrency assets that start to act like digital stores of value are going to be basically the standard store of value or collateral to open access to credit markets. So a big thing we've seen in DeFi is things like MakerDAO with the DAI stablecoin, or a lot of the crypto lending platforms where you can lock away your cryptocurrencies and you get access to stablecoins or credit of some sort. And I think it's going to get to this point where it actually encourages people, not only through the deflationary aspect, because the value over time will grow due to the monetary policy, but they'll see over time as they stack Bitcoin in their portfolio that they can get access to more and more credit. So they'll have something they're invested in that's growing over time, and something that accesses more credit without having to go through credit checks and things of the sort, where you can actually pay for the things that you need in your day-to-day life, and you don't rely on a bank. And it incentivizes people to hold that asset, but it's actually providing a utility where it is your bank in a sense. It is the credit access that you get. It's not going to work for everyone because in many cases, people need credit when they don't have enough money to buy Bitcoin or get access to it. But we're working on one way in our startup to get access to Bitcoin much simpler, where you don't have to worry about buying it. It's a very, very simple procedure and stuff, but I think it's going to be big in the sense of getting that next wave of users into the space.
Yeah. What are you most excited about in traditional markets outside, so forget crypto for a second, traditional markets in 2020?
Oh man, there's so many interesting sectors.
Flip it. No fear mongering. what do we think is the positives in the traditional markets?
Yeah, I mean the tech sector is showing no signs of slowing down. I think what I've put a focus on in our newsletter on the channel has been on the gig economy. For me, it's not something I'm per se really excited about, but I know it's something that's coming. It does provide a lot of opportunity for hustlers. A lot of people want to get out there and kind of be go-getters and make an extra income. But I think the gig economy, a lot of companies like Upwork and Fiverr, a lot of these companies are kind of the early stages of a much larger economy, because we've seen it with Uber, we've seen it with Airbnb, we've seen it with all these different companies like Uber Eats and stuff that do delivery, or DoorDash DoorDash, but I think it's going to expand out to a whole wave of people who are working more in kind of a traditional office space. Outside of this, while I'm excited to see not only through NASA's increased budget, we're seeing a large amount of support for a lot of aerospace companies and stuff, so I'm excited to see that space. And with Facebook's innovations in VR, they've been able to take the Oculus Quest, one of their standard VR devices, one of the most popular ones, to a point where you don't even need the controllers. Now you just have a helmet. You don't need sensors. You don't need the handheld devices, and it can read your hands now. So
really?
So I could be playing a game, and if, for example, I could grab a sword, right, with my right hand, and I could just close it like this and start swinging it around. I don't actually need to hold the controllers.
Wow.
Yeah, they've come a long way, and Facebook they're going big on this. For years, I was always very critical of the VR space. I was like, this is still probably 10 or 15 years out. But I think it's really getting there. It's getting to a point where things are much more professional. And the price as well for the Oculus Quest is becoming much more practical, because you don't need as much hardware as before. Mm-hmm. So it's very cool. And you also don't need a computer as well, because the computer's built in to the actual device. So when you're wearing the helmet, it's completely wireless in this case. There's no cables or anything of that sort. So it builds a much more immersive experience.
Are people doing VR meetings? I saw some people tweeting about that. Is that actually a thing?
Well, they should be doing it now out of all times, because it's definitely.
I think that's what they were. That's what they were basically saying.
Yeah, I mean, this is the time to test it. I've seen some people do it. I think the issue. I get it, because doing a lot of crypto conferences and just traveling across the world for different things in relation to business, I understand that personal connection you can get when you're sitting across the table like this in person can mean so much more, and we're not there in the VR world. But I think eventually, again, it's one of those things where once you kind of get that aha moment to make it like where it just fits into everything and the traditional way you do work, I mean, it's going to be a no-brainer, I think, for a lot of companies. Yeah, like when you're doing a virtual meeting and stuff, you see like Zoom and all these companies getting big. It'll be so much better in this case when you can actually be in a virtual room and stuff and actually show a projector. You have a 3D space and stuff. You can move around and stuff. I think things like that will make it really cool. But I think, again, we're probably a good 2 or 3 years out from really that kind of aha mainstream moment for VR. And it's going to really depend on the devices getting a little bit cheaper as well.
Yeah. It's one of those things where, like, I think everyone's like, at some point it'll hit. I don't know. I've played with them before. I will say that there's one immersive experience that I had. It was a kind of an advertising agency in LA, and I wish I remembered the name of it. So if they're listening, I apologize. But basically what they had built was an experience where you walked into a room, you put on a VR headset, and you immediately were standing on top of, in between two sky rises, or high rises, and there was a rope in front of you visually. And when they walked you in the room, before they turned this on, they had grabbed your arm and kind of positioned you in the room. And all of a sudden, they turn it on, and you're there. And they say, take your right foot and slide it 6 inches to the left, kind of underneath you. And when you do that, you feel a rope, because there's a rope laying on the ground that you're in between your feet. That's a big, fat, like rope that looks like the rope that you can see. And all of a sudden, they say, put your right foot on top of the rope. And when you do that, you're obviously paying it, you're looking in the thing, but you're paying attention to your foot and this rope, whatever. And so unbeknownst to you, they also have a fan that is positioned in front of you. And so they turn that on quietly. And now all of a sudden, you have your foot on a rope that you can see is walking between two skyrise buildings, and you've got the wind blowing on you. And you're just like, no. And they're like, walk. And I literally was like, no, I'm not walking. I mean, it scared the shit out of me. And I remember taking off the headset and realizing, oh, there's a rope, and here's how they did it and everything, and being like, that might be one of the scariest moments I've ever had in my life. And it was literally in a VR setting.
Yeah, man.
And it's just like, man, when you get into like the 3D world of this, where you can start to feel things and the wind and noise and geez, that's going to feel a lot like reality. It's just, that's a super confined, controlled environment. How do you bring that into that meeting that you go to, or to watch a sports game or whatever, for lots of people all at once? I don't know if they figured that out yet.
Absolutely, man. I think it's about building the sensory environment around as well that's going to make it more mainstream. I don't know how they'll go about doing it, but yeah, the one experience that I had that I could probably relate to that kind of aha moment with VR, I was playing a game that was specifically built for VR, and you can play it on traditional consoles, but it's called Super Hot. And it's a shooting game where you basically, the more you move, it basically makes all the enemies around you move faster. So you can actually stand still and look around your environment and kind of decide how you're going to go about picking up certain weapons or throwing items at them. And it was so funny. I had thought I was playing the game for like an hour and a half, and I ended up playing it for like 4.5 hours. And
really?
Yeah, the time I finally took off my helmet, there was 2 enemies ahead of me, and I was ducking behind a piece of cover, and I leaned into it with my 2 guns, and I accidentally fell over because I thought that the surface near me was physical. My brain had been tricked into it, and the game's graphics are not realistic. That's the big misconception people have, is that VR games need to be more realistic. The reality is your brain adjusts to it. It's a game just like life. Your brain is adjusting constantly to the environment, and after a couple of hours, you're sucked into that world, and everything around you feels realistic, and your senses are responding to it just like you would in the normal world. So I think when you can get more engaging experiences, when you can kind of cut the boundaries of space that you're restricted to with most VR systems, and you said kind of get those sensory inputs and stuff from the VR world, I mean, that's going to be a game changer. And that's when, again, I think a lot of people get curious about talking about things like Neuralink and stuff, like where it's just going to be like the Matrix, it's going to be an implant in your brain. But I think that's a ways away and stuff. So if that's the case,
think it'll happen though?
I mean, honestly, it wouldn't surprise me in the next couple of years. I don't think it's going to be something we see in the next like 3 or 5, because it's a lot of safety concerns in that case. But yeah, I think we could get to a point like that. I mean, the brain in that case can act very much like a computer. It's calculating all the sensory inputs around us. So I'm not an expert, so I wouldn't want to dive too much into it. But I definitely feel like there's a possibility in that.
Do you think we're in a simulation?
I've heard the simulation theory talked about a lot.
If you think about it, hey, if I just put on a VR headset, all of a sudden I can basically go in a different world. Why is that any different than the world we're looking at right now?
Yeah, I think there's...
I mean, yeah, that like this is real, but I think it's real.
You think it's... Exactly, yeah. So I would say I'm definitely open to it. I used to think that was a far-fetched idea and stuff. And I used to be a big fan of The Matrix. Like, Matrix is one of my favorite like sci-fi movies. But yeah, nonetheless, I mean, there's a possibility of it and stuff. I think I'm very interested, out of all things right now, to see where technology continues to go. But also as well, one thing that, again, it might be a little bit off topic and stuff, one thing that I started to kind of rekindle my interest in that I studied back years ago was like the space of psychedelics and stuff. That's one thing that I'm very interested in, and some of the experiences people have from some of them as well.
I feel like it's becoming much more popular now. Like, or maybe not popular is the wrong word, but maybe much more socially acceptable.
Exactly.
Right,
yeah.
where people are realizing, wait a minute, this stuff might be valuable for a subset of the population for medical purposes, and also it's just a plant. Let people do whatever they want and stop telling them what to do.
Yeah, I think that's a very good neutral view. And I think especially I'd love to see the medicinal use cases prioritized. And it's good to see a lot of the organizations like MAPS, the Multidisciplinary Association for Psychedelic Research, or Psychedelic Studies, sorry. They've basically gone through and done a study for MDMA mixed with a use case of therapy for people with PTSD, for example. And they've had extremely great results. I think it's upward of like the upper 60 or lower 70% range of like complete cure rates. So if you think about that, coming from a traditional investing background, if you were some drug company and you came to me with a pill that in the first phase or second or third phase trials came back with the results that great, your stock would pop in an instant. Like you would have a gem drug right there, because most pharmaceutical drugs don't have that kind of success rate. So that's the key thing to take away here, is that there's a whole essence of science, I think, from this kind of previous history of medicine and plant-based medicine specifically that's going to come back. And I'm interested to see as well, especially for mental health and things like that. I've had some friends who have gotten really deep into the field. They've had different types of experiences with different plant-based medicines, and their lives have been changed where traditional therapy never worked. And for me, I've always been very clear-headed. It's not the reason I got interested in it. I'm interested in the kind of experiences you can get from it, the kind of supernatural in a sense.
It feels like it unlocks a part of your brain you can't access without it.
Exactly.
Right, and that's both good and bad. Right?
Yeah.
But just that idea of, wait a minute, my brain's this big powerful machine. I can only use 80% of the computing power, or whatever the number is. But if I do X, then I can access 90, 95, 100% of it.
Yeah.
I feel like people have to be a little curious.
Yeah, I no doubt.
What's possible?
Here's the thing, Anthony, like at the end of the day, like a lot of people get in the debate of whether or not like these experiences are like real, or they're just, for example, like maybe it's in our head, it's an illusion of some sort. But I say no matter what, like let's take it at its most conservative viewpoint, right? That this is just something inside of our heads that the plant, this kind of medicine is causing. then heck, we need to research it, because some of the stories that people have are phenomenal. I mean, not only the medicinal use case, but the recreational, and the sense of like a sense of spiritual connection and sense of self. It's very, very interesting. So I think that above all, no matter where someone stands on it, we need to research it. We need to, this is one, I think, you were talking about kind of the things that interest me. It's not so much a thing in traditional markets or a company you can invest in. There are a few in the space, but for me, I'm just excited to see, in the sense of emerging technologies and trends, that this is going to be one, I think, the big revolutions over the next decade. It's kind of a rekindle back to this technology that's been lost for a long time.
Yeah. It's our most primitive forms of humans were ahead of us, I think, right? They understood the science, or maybe they understood the effects, not the science. And with current regulations, et cetera, we've kind of stopped a lot of that, and it seems to be making a resurgence.
Absolutely, man. Yeah, and I think with the world being global, with there being places where you can actually study or use this stuff in a proper way, in an actual controlled setting and stuff, I think that's the really exciting thing. So it opens it up to a lot of people who would have never learned about it before. But I think we're still a ways away from kind of the mainstream getting used to it. I would be very fascinated to see it become a standard in medicine in a lot of ways. I think especially in the U.S., we've got a mental health crisis in a lot of ways, so that's something that could be huge. It's one of the many tools out there that you can use. But yeah, I'm very excited to see that work in that space. And maybe it's not something that will make a lot of people a lot of money, but it's something that's going to help a lot of people who really need it, and that's really what excites me.
Do you think our medical system and healthcare system can quickly do something like that? Like, we're seeing their response right now to the virus, and I think it leaves a lot to be desired, right? Yeah. Not for lack of effort from the people in the system, but just the bureaucracy of how a system is set up and organization, et cetera. It just feels like we're slow, we're conservative, we're not quite as active as maybe we need to be. In something that, the World Health Organization is calling a pandemic, you would think, okay, that's like one of the most kind of acute situations, let's go deal with it right away. With something like psychedelics, it's like, maybe we'll get to it, in a couple of years if we want to, right? Like how do you balance between it could help people, it could be valuable with, well, there's still this huge bureaucratic process with the FDA, et cetera.
Right. Yeah, I think MAPS is a great example where when you get the proper funding and you get enough public support, you can finally start to do these in the same standard that you would do a normal prescription drug in FDA trials. And that's the thing for me personally. I, for example, as someone who was a skeptic when I first learned about it, I was very excited to hear MAPS was doing it just like every other drug, because it's a bit bureaucratic, it can go slow, but to have that kind of official seal of approval that's like, wow, like this actually works. It's now no longer a bunch of fanatics who are saying this is my experience. You have full concrete scientific proof in that case that it works in trials. That's when you start to get the wave going in this case. And I think it was the same thing that happened for cannabis, for example. I was following cannabis market since 2011. What you started to see is there was a lot of companies like GW Pharmaceuticals and a lot of other ones that would repackage THC in a pharmaceutical drug. And when you could start to see that it actually had real medicinal use cases and it went through proper FDA trials, then you started to see this leverage where the public awareness grew, the public opinion changed, and then the business incentive outweighs it. That's always what's going to swing the pendulum. I hate to say it, but it's business and incentive in that case. When there's enough business potential, that's when it's going to swing. And I think eventually, like cannabis markets, it's not going to be able to be controlled and siloed by big corporations. They're going to try to do it, but it's something that's it's a plan. It's so democratized in that case where, again, I think eventually people will have the right either to grow it themselves, so they'll go through a variety of different vendors and be able to get it for an affordable cost, and it'll be so accessible to people who really need it.
There's some people somewhere growing it themselves, whether we like it or not. Right. Cool, man. What's on the calendar for 2020 for DataDash? What are you guys going to be working on?
Yeah, man. So I think we're going to be covering a lot of what's going on in the macro environment, a lot of education into what's going on in the DeFi space. Outside of DataDash, I've got a startup I've been working on. We've been kind of alluding to it, but it's going to be launching towards the end of this month or in the first week of April. So I'm really excited to get it out. It's been almost pretty much a year of work getting this startup done. So I'm very excited.
I've seen some of it. It's cool.
You like it? I appreciate the Pomp seal of approval. Yeah. No, I appreciate it, man. Yeah, it's been a lot of work. I'm really excited to get that out there. And I think it's going to help expand on a grand scale crypto adoption for this next wave. So I think it's coming out. It couldn't have come at a better time. But outside of that, yeah, just keep doing the same things I'm doing. I'm doing a lot less conferences, trying to really sit down and I guess biddle, as people are saying, just build of some sort in this space where there's a lot of ripe innovation, a lot of great people. I think too, what's nice here in 2020, and I think it'll maintain throughout the year, is the people who are here right now are the best you can get. Like, they're people who really care about the space they're building, and they're not here for the sole investment opportunity. So once in 2021, that's when we're scaling out the business and the channel and stuff, and talking about markets and things of that sort. Right now, it's about really, connecting with the valuable people and building things as much as we can.
Yeah, I'm excited for you guys. I think that you have the right ideas to kind of what to build and how you're doing it. So when people finally get to see it, I think they'll like it too.
Thank you, man. I appreciate it. What's your plan for the upcoming year?
Just keep doing everything that we're doing. My big 2020 thing was less travel. So the world is somehow working, very nicely with me to make that happen. Polina's very happy that I'm not traveling nearly as much. But that was a big one. And the other thing was I don't want to change too much, right? So we're going to add, I think, one other show that we'll do on the content side. But other than that, now it's just an execution thing. Joe is an expert now at pretty much everything: video, streaming, audio platforms, Twitter, YouTube, everything. He even now can pull up memes on the on the graphics. And sometimes I look over and I just see him pulling up random memes. But I think that we're just hitting kind of the right cadence, and it's like you did a video a day for a long time, right? And over time you realize like that's what builds these audiences. So I think that's what we'll be doing. Absolutely,
man. I think you have a great personality to do long format content like this, and then also like you did with Raoul Paul recently. When you get quality people like that on there, people want to listen and stuff. It's needed more in the world of finance, and I think with Raoul Paul through Real Vision, they really prove that. Then also Hedgeye, a lot of these kind of new finance media companies are really proving that there's so much untapped information that wasn't accessible to an average person just 5 years ago, and it's really changing the game. So yeah, I think you're definitely a part of that and stuff, and I'm glad to see that you're scaling.
Listen, I keep telling Polina, look, I was born to entertain people. I don't know why everyone wants me to invest and do something. I'm just want to entertain.
It's good if you can do both. That's good, man.
I'm joking. Favorite book?
Oh man, there's a lot of good books. Okay, I would say my favorite one, because it really got me interested in macroeconomics, is The New Confessions of an Economic Hitman. Have you ever read that before?
I have not, but you were the third person I think that has said that on the show.
You've got to read it. I don't know if I have
Is it worth it?
Yeah, I don't know if I have it this time. I usually pack it in my backpack everywhere I go so I can give it to someone to read, or at least just be able to see it and get it on Amazon. But man, it's one of the best books in understanding like how banks can be very predatory in this. It's especially even like central banks and the IMF can be very predatory and using debt as a tool to basically take control of countries in this case. And it was basically a story over the last early few decades of the early stages of globalism and a lot of U.S. companies industrializing a lot of regions in the world, in South America and Africa, and then also in Southeast Asia. So very, very interesting book. I'd recommend. And knowing you're a macro guy,
it's a scary world out there.
It is.
Stay alert, stay safe. Aliens, real? Not real?
Oh man, it's so funny because we were talking about psychedelics.
I know.
And on a previous podcast, I talked about they brought up aliens. I would say that there's very much a possibility, but what's the theory where it's like if
Fermi's paradox?
Fermi's paradox, yeah, I was gonna say, yeah, that's the one that makes me kind of like concerned, because if there is aliens out there and we haven't seen them, then that'll likely mean that we're gonna peak out somewhere very soon. So maybe it's the financial system. Maybe that's where everyone gets stuck.
Maybe we're the aliens. Right? Forget the simulation. Maybe we're just the
That's
bad
true.
ones.
Yeah, that's I think the most interesting thing to me is I've never really been fascinated with like theories of aliens, because I mean there's already organic life on other planets. We've seen like single-celled organisms on certain planets, but for me, the concept of a simulation, knowing a lot of the stuff that's going on in the psychedelic space and VR, I think it's very plausible. I think it's made. I've had a like 180 flip on that over the last few years, but it's funny. It sounds crazy, but it's like,
our minds are powerful machines, man. Right? And I just don't think we understand it well enough. So who knows what's possible?
Absolutely. I think one of the few things we really don't know about, like we've done a lot of studies in relation to it, but just understanding the brain, it's still such a complex machine.
Yeah. What one question you have for me to finish up?
Oh, one last question. I would say more than anything, What's your take? I know we talked maybe briefly about it. Right? I know I'd mentioned it. What's your thoughts on DeFi? I know, I know it's been kind of a buzz topic, but I've been following it even before. Like I know when I was in April and at Consensus last year, it was the topic. But even before that, I was like, this is huge. Like
I'm a fan, man. Yeah. I think. So my whole take is DeFi is going to be important in the global financial system. I don't know if that means that it is 80, 90, 100% or it's 20%, but it's going to be important. One of the big questions that I think is unanswered right now is if you put kind of two buckets, right? So automated finance and decentralized finance. Structurally, I think of it as close to 100% of finance will be automated. The big question is how much of that will be decentralized, right? And so all of decentralized finance is automated finance, right? In order to have decentralization, you have to have the automation, but not 100% of automated finance is decentralized. And so like that's the big kind of, I think of it as almost like we're on the spectrum, like where do we end up, right? How far on the decentralization spectrum do we end up? There's significant advantages from it, and that's kind of why I believe that it will be very important. And so if you take that as kind of a high-level view, bullish, there's some questions to answer, but generally bullish, then you get into, okay, where's it going to get built? And I think that's where you get into like super religious and tribalism and like all like the
protocols and
crazy stuff. And here's my general sense is like I have my opinions, but I always am careful to say like, one, my opinion doesn't matter. Neither does yours, right? It's just whatever the market decides. And then two is over time, the things that are the most valuable will gain more and more adoption, right? Like it's a magnet. It will kind of attract this. And so looking at what's the most popular thing over a 1 month, 3 month, 6 month, even 12-month time period, doesn't really matter. What about over 5 years? That's likely to continue to be the winner or continue to be the popular thing if it's lasted that long, kind of like a Lindy effect, if you will. And so I just don't think we have enough data points yet to like really point and say like winner, loser, not relevant, etc. And so we'll see, but generally I think it's important. And look, the market says that it's important right now because a lot of people building on it.
Yeah, man.
Right.
To build on that point stuff, just to clarify, because I know we talked about it a little bit beforehand on this topic of DeFi. So on that topic of everything being automated finance, the real question is where we're going to see more traction and more kind of the CeFi or centralized finance space to DeFi, where it's like completely automated and completely like abstract, like smart contracts and everything. So I think it's a very good question. I think it's a pool of both sides because you can't simply just have everything be completely trustless and decentralized. There are some services right now where, for example, if I wanted to give under-collateralized loans in normal credit markets, if anyone could just go to a smart contract and pull funds, people would take out the biggest loan possible or duplicate accounts. So I think this idea that we're not going to have things like KYC or credit checks, it's kind of a far-fetched idea. Like if you work in the traditional financial world, you'll see that these components are necessary to determine things like creditworthiness. So I don't think that's going away. I think what's going to be cool is that moment when you see the banks and the money managers come over into the blockchain space, either tokenizing debt or, for example, doing loans through blockchain-based networks like Ethereum. That's going to be the huge kind of thing. I think
it's pretty damn cool.
It's going to be cool. That'll be an inflection point, to say the least, and stuff. So I'm looking forward to that day where they kind of cave in and come to this open blockchain where they don't have to trust one another. And that's the thing a lot of people don't know. To kind of close off, a lot of the banks don't trust one another. So something like Ethereum would actually be very nice because it's all verifiable on chain.
I couldn't agree more, man. Listen, where can people find you? DataDash on YouTube?
Yeah, so if you just look up DataDash, you'll be able to find me on there. You can also follow me over on Twitter at Nicholas_Merten. I put out a relatively decent amount of tweets and stuff. But just trying to keep up with everything macroeconomics and specifically kind of hone in on cryptocurrencies. I think that's the next big market over the next decade, and really excited to see where it all goes.
I appreciate you coming on, man. You're a legend and largest YouTuber in crypto.
Thank you, Anthony. I appreciate